Question everything, trust nothing. It's your boy BlockchainCrusader here, and we're back for another episode of TA Thursday here at Around the Charts with Magic Internet Money. What's going on? And the one, the only Bill Noble. How you guys doing today?
Good, sir. Thanks for having me.
I'm extra hydrated.
There you go. You were on me for a minute there. Nice. I'm good. So the FOMC meeting happened yesterday, right? Everybody was anticipating this meeting, but I see movement kind of flat right after this. So it's like, my question is, right, the whole thumbnail, the whole premise of the show is, have we lost the momentum? Are we headed back down to 19? I know I've been hearing that being a big support level for Bitcoin. Is the rally kind of, phasing out right now? We're still in a bear market, right? Or do you guys see more momentum moving up here? Can we sustain these levels?
All right, I'll take a shot.
Yeah, go ahead.
I'll take a shot. Okay, so let's run through the list. Bear market over.
Bear market over. All right, boom. That's a big statement right there. I mean, I like to agree with that.
This is the disbelief phase where people are just like readjusting their head in a clumsy fashion to a new bull market. So first it was, I'll wait for a dip. Then the dip comes before a Fed event. Everyone gets scared, kind of including me. Okay. Then the Fed comes out and gives everybody what they've wanted, which is, oh, I'll buy when the macros shift. Okay, bro, the macros just shifted. Now what are you doing? Oh, well, I can't do anything because it's sell the fact. No, man, it's not. Right? It's pause the fact, and then everybody realizes what happens and then acts accordingly. So what you do is you say, all right, it's a bull market. Bull markets trick you out of buying or scare you out of buying. And then what you got to have is you got to have your tactical work. I have some of that. Magic has a ton. You develop your tactical points, and then you have to muster the fortitude to get in, because as we'll develop, you guys later in the show, simple. Everything that you've ever known and loved about crypto, from freedom to technology to money, is about to unfold and be traded. So if you got a chart and a pencil and you can connect two lines, do it. Believe in yourself, believe in crypto, etc.
Boom. Mic drop by Bill Noble. Great statements there. Magic Internet Money, what do you think about this? Bear market over? Yes, no?
I don't know about, I would say over. I think that the low is more likely than in, though. I'm not as confident as Bill just to go mic drop. It's in. I think it's probably in. I do think we're still going to get a pullback later in the year. I just don't think we're going to see new lows. I think it's going to be a washout, and it'll be a really big opportunity for those that are planning for it, I guess, is how I would word that. So that's what I think. I think that as far as the momentum of the rally, you mentioned that earlier, my targets are still 26.7. They have been since December if we're going to get this kind of a rally. So I'm still looking for more upside. If you clear that level, then we can talk about some pretty insane price targets, obviously. But does that mean you should be trying to catch the end of this move? Well, if you're trading, no. But if you're investing, you have to ask yourself, is this a good time to buy? Well, it was a good time to buy the entire way up. So kind of like Bill just said, sit down with yourself, and have a plan, whether it's in the way I do it, which is all TA based, or if it's just fundamentally, like he said, you believe in crypto, what are you doing on the sidelines, given the opportunities available? So yeah, I'm long still. Let's put it that way. I'm not changing my stance there. Long and strong. So don't fight it.
I like what I'm hearing. Right. I also believe, right, that the bottom is in along with Bill. The determination of the bear market being over or not, that gets kind of fuzzy sometimes, but I would agree with that. I think it is also kind of, if it's not over, we're definitely at like the very tail end of it being over. One of the things that I looked at in the charts that kind of signaled that to me, and I learned it from Magic Internet Money's leading crypto group, was the regression downtrend, right? We were in a regression downtrend all the way since October of 2021, and we broke out of that trend, and now we're on the upside of that. So a gigantic trend, right? A massive macro trend on the daily has shifted for Bitcoin. I think that was the signal that, along with that came a double bottom too. So the double bottom, along with the regression trend breaking, I think that for me was the signal of like, okay, the markets are shifting. It's over. I think we're moving into a new market now, aka the bull market, right? Even if it's not technically the bull market just yet. So the FOMC meeting, it came, it went, like I mentioned earlier, no big pump, no big dump. So yesterday I didn't even cover the FOMC meeting. I said that was a distraction. I covered a lot of other things going on in the crypto space, right? I know Magic was in there. He heard me talk, ratting on about what was going on. So with Bitcoin right now, Magic, you said that you believe the next target is 26 something. Do you think we can still make it there? Do you think we have enough in the tank for Bitcoin?
So like Bill, I do time and price type stuff. Some of the methods that I use are things that I've developed specifically for Bitcoin, and I don't have us topping out until closer to the end of February, maybe even mid-March. So to me, the move to something like 26.7 doesn't just occur overnight. You know, it takes time. It's just like last year when you went from 32 to 47. It's a huge pump, but it took you from January 24th of the low all the way to March 28th. And again, hit right on time. So it was one of those things where you have to be patient. And I know it sounds like a long time, but a couple months isn't a big deal. And just because we might be getting a local top in that area, again, doesn't mean that we're going to new lows. Is it going to be a good opportunity for people like me that do enjoy shorting and longing? Of course, I'm going to look at that as an opportunity if it's there. However, it doesn't have to stop there either. You know, it doesn't have to do what I want, but I think that we've got time. We've got several weeks of this left. Can we have pullbacks in between? Yeah. I mean, like I said, nothing goes straight up or down forever, but I'm not looking for any kind of a change in direction until probably mid to late February at the earliest is how I'm looking at it. So we've still got a month of fun.
Nice. I got a follow-up question for that. And then, Bill, I got a question for you as well. But before I say that, guys, smash the likes if you're not smashing the likes just yet. Let's get the ball rolling. This show is about to get hot real quick. So you said local top, right, at the 26, 28 area. When you mentioned that, what is the local bottom that you're envisioning us going down to? Since you did say that you don't think we're going to go, like, you know, the bottom is in.
I mean, it could re-enter the range. I would want to see us coming back to probably like, man, you've got a lot of time in volume points of control coming in near about 20,000 down to even 19,150. To me, that would be a really big washout, and you'd still be $4,000 or $5,000 off the low, you know? So do I think that's going to occur this year? I mean, I think it would have to be later in the year. I don't think we're getting there by the summer or anything. I think it'd have to be later, but, that's what I would be planning for right now, but I don't have a crystal ball. So like if I was just giving it the 1,000,000-mile view, if I was just zooming out altogether, that's just the area on the chart that I'm looking at. You mentioned 19K earlier. It's obviously a big support. I don't think we're seeing it anytime soon personally, but you know, you never know. I could be wrong.
Yeah, anything's possible, dude. Anything's possible with this, right? And it is a long-term view, right? We are just the market has just been shifted. There's excitement to be had, but there's no reason to, you know, start doing some moon bath saying we're going to 100K by summertime. I don't think that's going to be realistic. So I hope people can manage their expectations.
Are people actually saying that you can go to 100K by summertime? I don't keep up nearly as much as I used to.
I don't think they are, but you know, we've mentioned here, at least on this episode right now, you know, the markets have shifted, things are changing. And people start hearing that and they start doing moon math, and they're like, "Wait a minute! These people are calling the bull market. We're going to 100K, baby, next summer. Let's go!" And that's like
I've seen some people call for like 100K, but 100-ish K by like next year, basically. And they're going off of Elliott Wave, which I think that they've done incorrectly, but that's like a hot debated topic because there's lots of different ways to do Elliott Wave. So time will tell. Let's put it that way. Time will tell.
Yeah. So Bill, to you mentioned something very interesting before the show started. You were talking to me about AVAX and a massive corporation that I actually talked about earlier this week as well, getting into NFTs. Please tell the people a little bit about this and what you think is happening for this project.
Okay, so in mid-January, it was reported that, you know, Avalanche is going to partner with Amazon, and Amazon is going to make Avalanche. It's kind of like native blockchain. Right? Like I've got the Motley Fool article here, right? So, you know, this crypto just partnered with Amazon. Okay. You know, it says Ethereum might be the obvious choice, but they did Avalanche. Okay. So what happened with Avalanche? Well, okay, there was you had a couple of pumps. This is a daily chart. Avalanche has done well, but Avalanche has only recently taken out the high from the start of the give up trade, right? In other words, this was FTX. It started from 20 for Avalanche, right? The collapse. Well, it just took out 20. Now, in Elliott nerd terms, Like the DeMark work draws it for me, saving me from the subjectivity of Elliott wave. The previous fourth wave is something that, or the start of the give up trade for the downtrend, is a natural attack point for a retracement. Right? Even if it's still a bear market, it's going to go back and retrace where the give up trade started from. Well, guess what? Avalanche took out the previous fourth, which is a bullish signal, and now it's advancing. So you might look at this and go, well, it looks like I missed out. And then I would say, have you? Right?
Yeah, what was Avalanche's last time, at least all-time high or something like that before the bear market? Talking
160?
like $60?
No, 160.
Oh, 160. Holy
160.
smokes.
Right. So, I mean, if you look at it this way, this could be the bigger the base, the higher in the space, because, you know, Avalanche pretty much died after Celsius and never came back. So this bigger the base, the higher in the space thing was, I don't know. It's kind of how I kept people entertained in 2019 and early 2020 on YouTube. This is the same formation that ETH made. And essentially it just gives you the idea that the market can re-rate itself. Now, meaning it can just, you know, like, for example, like, why can't Avalanche be at 70? I mean, it was at 70 right before Celsius started. So why couldn't it go back there? Now, just as an addendum, so I don't sound like a complete moon man, because Magic said it and he's right. It's spring, not summer. It can still snow or rain hard in spring. So a lot of times I'm telling people, get while the getting is good, right? In other words, when you see a dip like this, where you have a green candle and then it kind of comes off, even though that's not a good looking candle, that is your dip, or it's a suggested thought process. So on one hand, that is your dip, and you need to make money on dips while you can, because what'll happen is when we transition from disbelief to everyone loves it, that's when you get the flush out. Okay. Later, March, October, those are my crystal ball dates for a flush. You got to remember, in 2018, 2019, Bitcoin went down to 3,000, then it went to 14, and then on COVID, it printed 4,000 again. So you can have incredible volatility, right, and still be in crypto spring. So should Avalanche be at $20? Just ask yourself that question. Look at this picture, and then, I don't know, check out whatever tacticals Magic may have. If he's telling you Bitcoin can go to 27, then these altcoins have got room to move, right? Because if big boy's not going to go down, the rest of the market has a chance to go up.
Exactly right. Bitcoin is up like 40% this last month or so. Cardano's up like 60%. Avalanche is up like 80%, I believe it was. And there's all the altcoins, right, have been massively moving. So if Bitcoin can continue moving forward past 24, right, and past 25, and we're going to 27, 28, that sounds like, oh, that's not a big movement for Bitcoin, but it's a massive movement for the altcoins that are going to be rallying along with that. So if we've already moved up 60%, 80% on some of these altcoins, the altcoins are going to rip even higher if Bitcoin keeps moving up. So I completely agree with that. And, you know, talking about the altcoins, talking about one of the ones that have been holding up pretty strong has been Ethereum, this entire market, right? So Magic, what do you have for Ethereum right now? How much longer can Ethereum hold this movement, and where do you think it can be topping out? If
that is a good question. The old ETH chart. So again, I'm working off of a very, very similar chart that I've been working off of. I built this chart and presented on your show back in the summer. It's the same one. So the same levels have been here. This was our single print we wanted to see defended, which it was. Kind of pierced into, back tested. That was your big level of support. Then up to 1418, it was a merged value area low, but also it was the old all-time high. So you had dual confluence for this being a really nice level, which it's proven to be. 1646, this is your TPO value area high for all data included, and then the value area low. So we really want to see 1784 reclaimed here. If you can get back above 1784, or just flip this box, we'll say between 1646 and 1784. I know it's a $140 window. It's not fair of me to give something that large, but this is the zone that, if support we get a nice bounce. So you start holding 1784 as support, you'll start putting pressure on this level up here right around 2K, right? That's when you're going to start putting pressure, consolidating underneath resistance, as some people call it, and you can look for 2600. Now, I'm one of those people that when I see something like this and I'm looking for a larger move and I'm saying, well, timing is everything. So if we approach this level in this region like so, if we approach the chart like this, and we say this is our range right now, right? Just from a structural standpoint. And we're approaching this level coming into the end of February, maybe, mid-March, and we're looking for a potential pullback and that recipe is there. I'm looking for an overall bigger range at that time. So I would be cautious, as you'll catch me saying, is it doesn't have to stop here by any means. However, you are getting close to the top of the range in terms of what this asset has been doing lately. And what I mean by that is like the last 7-8 months, it's been in this range. If it continues to stay in this range, you want to have a plan. I want to be buying at the lower half of the range if given, under $1,500, maybe it's 14, 18, wherever you've got to put your bids. And then you're going to have to be patient and understand that if this is putting in a larger accumulation range, which we've known assets to do in the past, like so, Litecoin's another really good example of it. You want to be strategically buying low, and then you don't have to sell everything at the highs. Just take some profits and you can take that and try to reinvest again and get more of the asset if you're in it for that kind of a play. But the reason you don't sell all of it is because if it does crack through here, I would expect to see this $2,600 mark. That is your overall point of control for the structure, according to ATAS when I did this. So that's where the most volume has been, and that's where I'd expect it to go next.
So you're saying if we crack 2,000 on ETH, 2,600 is a pretty good chance we're headed up there.
That's where I'm looking to. I think I've got a different ETH chart as well up here. Yeah, so this was a different one for Bybit because since I trade on Bybit, I obviously chart on it as well. It doesn't have as much data. However, this is your 6M2, which is the last, I guess the first 6 months of 2022 worked out into an average. And you can see that this is all coming in at the top of where we were just identifying as the range high. So 1946.90 is the level you're going to want to see claimed. You do that, you'd be clearing out your last weekly point of control here. And yeah, you're looking up to 2365, 2457 is what the averages tell us. But I think 2600 is, on a wick basis is where you could see it. So, yeah.
Wow, dude, that would definitely be interesting watching a $2,600 or $2,400 ETH. I mean, it's one of these things where, like Bill was mentioning, the disbelief, right? My parents got into crypto for the first time last cycle, right? They were buying up ETH at about a K or so, about $1,000 or so, and they bought all the way up to 2,000, and then I was like, hey, you probably shouldn't buy anymore, just let it sit for a little bit, right? And then everything came back down, right? The bear market came, everything came back down, and I'm telling them, hey, like, the market is shifting now. The market is changing. Like, things are coming back up, right? Like, ETH is back at 1,700 now. And they're like, yeah. Let me know when it's like at 3,000. Then I'll believe it's back. And it's like, this is the opportunity in my eyes as a long-term investor to be accumulating at these low prices. We're not guaranteed these low prices forever.
Yeah. No, and you can look left as well. If for anyone that's doing that, you're definitely not guaranteed low prices. That's why I say buy strategically so you feel good about it. You're going to feel good when you're up in the top of the range if you bought at the bottom of the range. So when it comes back down to it, I think Bill said, bottoms never trade pretty, meaning that it's kind of a painful process at times. But if you're buying down here, your risk is just much lower and your return is always better when it goes back up. So, you just have to kind of do that and avoid buying kind of like you said, above 2,000. And to your point, 2,000, right? That was the first big pullback. That's why I wanted to shift left here. Is right here. And then when we take this and we look to the right where we are now, and there you go. So you can see this was a really key inflection point, first major sell-off of the rally. You are now back at that, trying to get back in that zone. So that would be how I'd be looking at Ethereum right now. That's without zooming out or doing anything like that. I usually zoom out to like the 3-month and just take a look. And yeah, you can see you've got, look at that, your Q3 high comes in up there. So that's going to be important. But just above it is the Q1 low, which has been really important for most assets at 2155. So I would be cautious at this 2,000 mark. I'm not saying it can't crack it and get back above and go backfill some of this, but it's definitely resistance. It's showing in the chart, And, you know, I'm never going to tell someone to buy into resistance. It's just not my bag. So you guys got to do your own homework there and take the risk at your own risk, I guess, for lack of a better term.
Dude, so perfect. I got a question here for Bill, talking about buying into resistance, talking about, you know, the lower prices not being guaranteed. I missed the bottom of Cardano at 26, 24 cents. I didn't buy there. I thought we were going to hit a little bit lower, so I was holding off. And now we're at about like 40 cents on ETH. Are we at resistance here for ETH? For ADA? We're at 40 cents. Are we at resistance here for ADA, or do we see some lower levels possible for ADA again? Well, what are your thoughts on that, Bill?
Okay, so let's talk about Cardano. Let's talk about onboarding relatives into crypto. So when people get excited, because I onboarded my girlfriend last night, and she has a long list of people whose houses I have to go to get her onboarded, to get them onboarded into crypto. So here's what I tell people: if you're just so excited to get in and there's resistance, well, just buy a little. You know, put in some lunch money or some Starbucks money, so you'll have a position and you'll be in. Okay, then. Okay, if you get a flash event, right? Like I think in equities, this used to happen all the time, where, you know, you'd just be sitting there and then all of a sudden it would like drop 4%. In crypto, that's a much bigger number, right? You got to have a bid in down there in case it just lurches lower. These are risks as you approach resistance, or you can see it as an opportunity. So have your position in, your orders below. Cardano has resistance according to DeMark work at 46 cents. Okay. You know, obviously people probably regret missing the bottom, but should they? Because Cardano, like, you know, the week of January 16th, it dipped, it came back. Cardano, the week of January 23rd, dipped, came back. Guess what we did off the Fed? Dipped and came back. 3 weeks in a row, the market is telling you we want Cardano. I think they're going to take out 46 cents. Now, is Cardano a screaming buy at 40? Maybe, because in DeMark work, you normally get the dip on these, you know, there's a quantitative system on the 4 count. So I'm not afraid to have what I would call a core long. Like say, all right, let's just get in here, but not all in. Everybody in crypto thinks it's like, okay, I have the money for my rent and my house and my food in crypto, or I'm out and never coming back. There's a middle ground. You can have some position, because I think Cardano, this is weekly, right? There's a simple DeMark-based moving average that comes in at 57 cents. So if it's at 57 cents, which is also this prior peak, right, from right after Celsius, that's where I would be like, okay, don't do anything, chill out. But I think you can have a core long here, because I think this week could have been the final dip before some of these altcoins go on like a 3-week run. And then, you know, you get your dip, right? You get your dip. You probably get your bigger dip in March, but the market is telling you, right, that on a weekly basis, when this goes down, we want it. I mean, these DeMark moving averages, they're automatically generated. There was somebody down there the week of the 16th. Okay.
Yeah, just buying up Cardano.
Yeah, but just buying it up, right? And then of course it makes just using common sense, you know, Cardano has been, it's an interesting story. But, you know, where is Cardano? Cardano is where it was in January of 2011. It's almost like the bull market never happened. It never happened.
You mean it's 21? January 21?
I'm sorry. Yeah, January of 2021. I apologize. Okay. It is exactly where it was right before it took off. So it's almost like in schoolyard basketball, it's a do-over. So
yeah,
yes, it could stop at 46. It will probably stop at 57, because it certainly did over here, right? This is where it really failed badly, this moving average. But I just believe you got to have something on so you can control your emotions. That way, if it dips, you're like, oh, thank God I can add to it. And if it goes up, you go, all right, well, at least I had something on. So managing your head is just as important in the bull market as it is in the bear market.
Dude, 100% agree with that. And, when you're talking about ADA and where its price points where it's at right now versus where it was in 2021, like I said, right, everybody knows I'm not a trader. I'm not buying and trading. I'm not shorting. I'm not doing any of that stuff. But my math, right, my basic logic with ADA is it's been around for a good amount of time. So I suspect it's going to be around for a good amount more time around, right? It's a good competitor in the space. At the same time, it went to $3 with no smart contracts, practically no smart contracts at all, right? No dApps, no NFTs, no anything built on it. Now entering the next cycle, right? Every cycle we're experiencing more adoption, more awareness, right? There's more mainstream media attention on crypto. Cardano is one of those things that psychologically people say, whoa, it's so cheap, right? It's been around. It's quickly to figure out that it's been around for a long time. It's on almost every single major exchange, right? Coinbase and all the beginners are at. And if it hit $3 with basically nothing but just a layer one solution the last time, now having NFTs, smart contracts, everything else built on top of it, that I don't see any way that it can't surpass that $3 range again, right? I mean, if we're talking about a 589 price number, everybody talks about that for XRP. I think Cardano is more likely to get there before XRP does. And I'm not talking about $589. I'm just talking about $5.89. So that's the math and logic that I do for Cardano and why I hold it long term. I regret not buying at 24, 26 cents, but I was buying the 30 cents. And I probably will be buying some more here in the 40 cents. Obviously, this is never financial advice for anybody else. It's just what I'm doing because I do believe in Cardano long term.
Did you ever see the Chat GPT where someone asked it to do the calculation on the price if it took over X amount of Swift?
No, I haven't seen that. Tell me about it.
Yeah, so they said if they got I want to say it was 5 or 25. I think it was 25% of the no, it's 5% of all of Swift's business, which is a lot. It would go to $5, and people lost their minds when it calculated it. And
only $5.
Yeah, only $5. And because you know how they are, even if we get 1%, we're going to be trading at $20. And I was just oh man, the reality of AI hitting them in the face.
AI crushed their dreams right there.
It even said that if they got all the business, 100% of Swift, it would not breach $100. So
wow, it would not.
Yeah, I was
$100.
And that was with a 50 billion supply. It didn't even have the 100 billion in there. Wow. And I know they have a burn mechanism or whatever. I don't think it's very aggressive though, but I thought that was very interesting. And so when you made the statement that ADA will reach $5 or $3 before XRP, I was oh man, he's gonna love that. I'll have to find that video. I'll send it to you.
I'm gonna clip that. I'm gonna clip that for sure because that's the best news I've heard in the last 2 cycles.
I don't
come from
wish
anybody being biased. It just comes directly from AI.
Yeah, that thing is definitely a little biased, but we'll get in that another time.
that's for a What If Wednesday.
Yeah, there you go.
All right, guys, smash the likes if you haven't smashed the likes just yet. I had another question about so we're talking about the bear market kind of coming to the tail end, right? The market taking a big shift here. The FOMC kind of walking off the inflation, the interest rate hikes. How do we see the rest of this year playing out? Right. I'm not asking you guys for price predictions exactly or anything, but how do you expect the market psychology, the sentiment, and kind of the swing of the market to be throughout the rest of this year? With whether you want to account for some macro stuff happening or not, what is your thought process when you think about the rest of this year? What's happening?
I can take that one. That's I've got a pretty good outlook on what I think is going to happen. Going into yesterday, everyone and their dog was expecting 25.
Yep.
That's what we got. We did get some, pretty soft comments from Daddy Jerome. So that was kind of surprising. I thought he would get back to the harshness that they've been speaking on. And they have swapped out in some of the committee members for some more dovish outlooks as well. So he hinted at potentially pausing rates even as soon as next time if the data was good enough. I do think they're going to do 25 again personally, but this is the first time that he's really kind of made the leap of extending an arm that they might consider pausing. I don't think they're going to do anything roll the rates back, anything like that until 2024. I think they'll stick to that. But the conversation is definitely being had of, have we reached terminal rate? We're happy with the progress we're seeing. And everyone that follows it knows that rate hikes take time to take effect, like could take up to 6 months in some cases. So all those 0.75% rate hikes are still hitting. A great point was made yesterday. I can't remember who made it. It might have been Caleb Franzen. Might have actually been one of the guys on Sin City. They were talking about how inflation was goods-based for a long time during COVID because the service industry was just getting demolished. And now you're seeing that service industry kind of come back and take some of the pressure off of like goods-based type thing. So, which I thought was a really interesting point. So I think that we could see a softer Fed going forward. However, historically, this is the only elephant in the room why I think that there could be a crash later in the year is once you're done hiking rates, the market usually doesn't crash till later in the year after the rate hikes have stopped. That's when you get the crash. So does that mean new lows? I don't necessarily think so, but
interesting. Could you show us a few examples of that?
I don't know if I have that chart up, but let me see if I can't find that. I'll have to see.
And in the meantime, as a follow-up discussion question, with that statement, right, of them becoming a lot more dovish, them even saying that they might pause, right, stop interest rate hikes for the next term, why do you guys think that we haven't seen a bigger move in the markets from those statements, right? When just the last couple of meetings, every time they spoke, they said the smallest little thing that was kind of bullish, right? The market moved. You see Bitcoin moving in real time. Why do you think
the market moved real time on those statements? Trust me. I went over the order flow yesterday. It moved big time. You got a washout. You had a huge open interest drop off where they basically stop ran everyone that was long, and then longs just piled in as soon as they got everybody's stops. I mean, it was very fast. You had maybe 1 or 2 minutes to get into that trade before it just took off. So as soon as he started speaking, that took place. So there was a move. It just wasn't what we're accustomed to in terms of, seeing like the massive volatility of these like 75-point swing for interest rates. But the market definitely did respond. It was definitely a very bullish response from people.
Okay, I think with the Fed, right? I'm here looking. Unfortunately, I'm old enough to remember these things. Okay, this is S&P from 2000. So Greenspan, the Fed chairman at the time, had to put an end to just the absolute wild speculation that was going on in tech and internet. It was just crazy, right? So this is, S&P going up, and it doesn't really reflect the mania in NASDAQ, but you can see bonds tanking because rates are rising as Greenspan tries to jam on the brakes. Well, Greenspan did jam on the brakes. You had the mother of all tops in NASDAQ and in equities in March of 2000, right? So bonds fall, rates rise, and then stocks do this huge 2-year puke. Huge 2-year puke after the rate hike cycle. Now, in this particular case, how will this play out? My guess is that everyone is currently calling for a crash in equity. So I'm switching to screen share, to PowerPoint. Okay. Everybody's calling for a crash. Like, Ray Dalio, the guy from The Big Short. Crash, 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 crash.
Well, the guy from The Big Short is saying it's a short like all the time. Every other day is right. Like, so. And then he deletes his tweet.
And it
20 of the last 2 crashes is what somebody said in my group.
Exactly. So when these big thinkers think there's a crash, they may wind up being right, but they're always early. So if you just look at the DeMarc Elliott wave in S&P, right? From 2010 to 2020, that was the first leg up. That was 1. Then you had the COVID puke, that was 2. And then you had, let's print money party, that was 3. And then you had the rate hike cycle, that was 4, right to a 50% retracement. So as the person who taught me how to trade bonds would say, everybody in, everybody out, everybody back in again, right? In order to have a crash, you have to have froth. You have to have people partying with a lampshade on their head going, see, you guys were wrong. Nothing could ever possibly happen. And then you have an event, which I'm guessing is the fall, right? You have Rectember and Rocktober this year. That's probably what's going to happen. But in the meantime, You know, you can have a crazy new high in equities. You can have 50K Bitcoin. In research, you get paid for imagination. You have to imagine both a positive summer and, you know, as Magic was telling you, you have to imagine, you know, what the big event could be, because there are a lot of things out there that can create a big event. Fear of that big event can create a short-term rally, but there can be a reality check later, which is where guys who have control of their emotions, who are good at tactical trading, that's where they'll come in and hoover it up, right? So by the time people believe, it's over. And I don't think we're anywhere near that right now.
So you think we're so for the rest of this year, you guys are thinking we're gonna somewhat make some big moves, right? All the way to higher prices, and then somewhere around September, October, towards the end of the part of the year, have some type of flush out event where things drop back down and oh snap, right? Catch people off guard because people are building up the hopium. I have heard that if Bitcoin crosses, I believe it was like 32,000 or something like that, then that would change things. That would change things for Bitcoin's price point of it, whether it comes down or not. Can you guys speak on that, or what do you guys think about Bitcoin crossing that level?
I mean, if it crosses 32,000, I think that as soon as you're holding, I would say the 2021 low. Let me make sure I have that number correct before I spout it off the top of my head.
Yeah, but basically, the overall question is: would 32,000 cancel out that flush out in the later part of the year if we get above?
Would it cancel it out? I think that you have a better chance of going to like 48 than you do going back to like 19 at that time. If you're above, for me, you've got to be above 27,744 to 28,955. If you're holding that as support and putting pressure onto that 32K level, I've got a little different level. I'm not looking at 32K as the level you have to necessarily get back above for this.
Yeah, I was an estimate because I'm trying to remember. It was somewhere around the low 30s.
No, you're correct. I mean, it's there. It's one of those things. I'd be looking closer to like 48, 50,000 at that time. Personally, I think 38's a big level. 38,922 would be just an obscure, large resistance to have on your chart, but ultimately everyone's gonna be looking for that gold pocket, which I know comes in that region. So, and it would make sense, but yeah, you're correct. If you got above 32, that would be a very safe assumption to think that if we went, like, let's say we went as high as 48, I mean, the odds of you not coming back to like $27,000 to $30,000, in my opinion, that region is pretty low. I think you will see that region again. But if maybe we get a true melt up theory, maybe we don't. You never know, man. Maybe he was just a year too early.
Maybe, right? Maybe,
you never know. He might not know who we're talking about. This guy called for a melt up last year, all of last year, in like the worst downtrend ever, and then gave a timeline that it had to happen by November. And now we're getting the reversal in January. He was off by a year basically, but he was calling for it for like a year, and finally admitted it was wrong. And as soon as he did, the market reversed, which I found very fitting of how the markets treat people that make grand predictions. Just lets you guys know that even the smartest people, we get things wrong too. Not to say we're smarter than anyone, but it's one of those things where like we do this all day, and that doesn't mean we know any more than the other person sometimes.
Yeah, dude, right? Like Noble was saying, Bill Noble was saying earlier about the 2008 crash. What was his name? Michael Berry or whatever it was. Like he was calling like a year ahead of time. People were like, "Are you crazy? Like the market's not going to crash."
Honestly, he would have never got any credit for it either had nobody made a movie about it. We would have never known who this guy was if it wasn't for the housing crash that took place. So if you're asking for, like, my opinion, catalyst for anything like a true market wipeout, like new lows, the housing market is probably going to be usually what goes last is the housing market, in my opinion, and from what I've seen. But if the housing market went, that could really hurt everything else. And I think at that time, when the housing market goes, it's going to be because the job market is going too. And those two things in coordination with each other would be an absolute shitstorm, because now you got people that are defaulting on their homes. You've got an already housing crash that's occurring. You probably are going to have some bigger issues on your hands. And then it becomes this, okay, this was all just a giant bear rally, and we're in for years and years and years of pain. We're all wrong at that time. That's the worst case scenario. But like I said, jumping to the worst case scenario, when you're right, you're going to look like Michael Burry in 2008. Yeah. But when you're wrong, which is a majority of the time, you're just the guy who cried wolf. But when you get it right one time, dude, you're going to look like a genius. And I'm not saying he's not. I mean, the guy knows way more about this stuff than I do, but just, my opinion is don't ever jump to the most insane conclusion in either direction. Just make good decisions at inflection points in the market. We clearly had one at this last bottom, and it gave people clear signals that it was going to start moving up. So even if you were late, you're still getting into the trend as it's starting, right? So
yeah, dude.
I mean, my theme is make money while you can, right? In other words,
exactly.
It can go up more than you think in the summer, and it may go lower than you think in the fall. Because again, nobody is really taking into account things like geopolitics, right? And we are talking to the prepper community. I currently live in Austin, Texas, where we had an ice storm, some trees fell down, and the power problem is so bad here. The city of Houston is sending people to rescue us.
Wow.
From lack of power. So, it doesn't have to be an absurd black swan that you have to be a PhD to figure out, right? In other words, if people don't believe it, it can go up. Once people believe it and think there's nothing to worry about, well, we all know there's always something out there. Okay. So much higher, a bigger rally than you'd expect, followed by a bigger drop than you'd expect is logical. Because again, you go back to housing, rate hikes take a while. So if housing prices roll over, even if the Fed cuts interest rates a little, there's no more 3% 30-year mortgage, folks. That's over. So I'm kind of wondering who the marginal buyer of housing is if it really does collapse. And the answer is nobody. Nobody. So, but that
I'm gonna buy.
Is that going to trade now, or is that trade going to get done later? And of course, Magic's right. At some point here, there's going to be a golden buying opportunity in real estate. That's just usually the last thing to bottom. I
do have a question, Bill, because you've got a lot more experience than I do. And I know CVO's been on your show and brought it up, Crusader, so I'm bringing it up. He believes that the housing cycle is still going, that we haven't reached a peak in it, and it's got several more years of upside before there's a crash. I can't remember the exact dates. He was on your guys' show.
He talked about it. He talked about it.
2026, maybe 2026.
Somewhere around there, close to like the 2029, which would be 100 years from the Great Depression. And that all this is one big, massive cycle that is made up of little tiny cycles. He talked about it on a What If Wednesday. And that episode actually got like some issues with the YouTube overlords.
So all right. Well, with housing, right? Everybody may be expecting a repeat of 2008 where it just kind of crashes, right? I think in this particular case, the higher end of the market is what needs to re-rate. In other words, crypto is too low and high-end housing is just too high. So maybe housing doesn't crash on everybody, but you're not going to be able to get liquidity. Now, that said, if someone owns their home, right, and their home is stable in value, they'll probably hold on to their home. So middle of the range, okay. If you paid $25 million for an apartment in New York City, well, hell, that crash may have already happened, or it may be happening as we speak.
Oh, yeah.
So maybe housing, maybe we're all right. The general housing cycle may last, right? Rents may be slow to come down. I can believe that. All right. But the days of the 3% mortgage are gone.
100%.
I can tell you that. I actually just applied for a refinance because I own some units here. I was going to do all the roofs. And I was like, I'll just pull out and refi. The rate I got, this is like literally within like the last month. It was 5.7. I didn't pull the trigger on it, but my current rate's 2.74. And I'm just like, oh man, 5.7 hurts, but I've heard worse. I've been hearing worse. So it's one of those things where I do think it'll have to, I think 2024, I think I can hold out till then. I'm gonna wait for rates to come down a little bit. I'm kind of a stickler for what I lock myself into. But you are correct though. The housing values are coming down a little bit, and so are the rents, because these are the ones I own are just cookie cutter townhomes is how I could refer to them. There's like a whole block of them, right? And I just own like a handful of them on the end. And the rents were $1,500 just next door, same exact floor plan, everything. Now they're down to $1,200. Now they're looking for a tenant, so it's come down $300 over the last like 18 months is what I've seen. It's gone up $300, come back down. And it started at about 1,095 2 years ago. So it's been up as high as 1,500, back down to 1,200. Still higher, but
yeah, but that's a big drop because, dude, where I'm at, rent is on like 1,800, 1,900, 2,100.
Well, I saw some of the rents where you're at when I visited CVO. He was telling me about it and like the prices of homes there. Man, I enjoy living in Middle America. When I hear that, it's a little boring out here, but that's okay. Boring. It doesn't pay the bills, I guess, or pays the bills in that case.
Yeah, dude, I'm gonna probably have to start moving up there because I can't afford the
Dude,
rent.
you come out here and get some chickens. You'll feel like you're king of the mountain out here. You have eggs.
With the egg shortage. You just be
Yeah, man. If
money.
you got eggs, man, that's a new gold bars right there.
Well, that's right. Now I also heard that there was a banana shortage happening.
Oh no!
So get ready for that. I mean, I think we're just gonna start hearing stories on top of story of something else going into a shortage one way or another. I mean, I don't know. It's getting wild out there for sure. But guys, I appreciate you guys coming on the show every single Thursday to come on here with a great TA, great information. So guys, if you guys are not following these guys just yet, their links are down below. Go follow Magic Internet Money. Go get involved with leading crypto. Go follow Bill Noble. Man is a savage. All right, he was just live right before coming on here, and then he came back on here again. So he's a YouTube savage all day, every day. Guys, I appreciate you guys coming on, like I said. And like always, question everything, trust nothing. And until next time, hodl like it's hot. See you guys.